Good morning, everyone. Just want to take a look at a couple sectors here because we got a lot of sectors breaking support. There's 11 sectors that we look at that make up the S&P 500. Now, what is support? Well, support's a large collection or group of buyers who are looking to pay at or close to the same price. So a lot of times when markets move lower and they get to a support level, they tend to reverse or pause or halt. Now, if a support level breaks, then that shows us that the investors who created the support with their buy orders have left the market. Maybe they finished their orders, maybe they canceled them, but regardless. So this is why when support breaks, it's not just a symbolic thing. It actually illustrates a supply and demand dynamic. And this is what we look at Stock Market Jobber. All right, so the first thing we have here to look at is our technology sector. And we can see that over the last couple of days, the support has broken. Now, there's a reason why this level is support. This is 129.50. It's because it was resistance back here. So sometimes in the markets, levels that were resistance can turn into support. And why does that happen? Seems like an odd thing, but it happens because of seller's remorse. There were investors who sold who regret doing so when the price gets higher. And a lot of these remorseful sellers tell themselves they're going to buy their shares back. But they don't want to do it unless they get them for the same price that they bought them, or sorry, they don't want to do it unless they could buy them for the same price they sold them at. So if there's enough of these remorseful sellers placing buy orders, the level that was resistance becomes support. So this is going to be an important thing to watch this upcoming week. Now, there's a good chance we retest it. That we're going to look at a couple sectors, but we could retest it. And then we have to see, does support become resistance? And that's because of buyer's remorse. People buy, and when the price goes lower, they regret doing so. So they tell themselves, you know what, I'm going to get out, but I don't want to do it if I have to lose money. So what I'm going to do is I'm going to sell my shares at the same price I bought them at. And if there's enough of these remorseful buyers placing sell orders, this level will turn into resistance, and that could set the stage for the next downtrend to form. Financials really look weak. I mean, this is a big move down here. Just gap lower. And yet, again, we can see that a level that was resistance became support here, but now that support is broken. So again, if we rebound, look for the dynamic of a former support level turning into resistance, and if that happens, it could set the stage for the next move lower. So that's our financial sector. This is our industrial sector. We can see here support broke here too. So resistance became support. Now that support is broken. It's a good example of a level that's a psychological level. There's really no logical reason why a market would stall out at $100 other than the fact that people, investors, retail and institutional alike, each like to buy and sell around levels. So people say buy if it gets to 100 or sell if it gets to 100. They don't say buy if it gets to 98.74 or sell if it gets to 101.89. They like nice round levels, and you don't get more nice and round than 100. So that's our industrial sector. Communication services, we can see here it's broken this support at the $49 level. So these, what I'm looking at here are ETFs that track these sectors. These are the spider ETFs. There's 11 sectors, and by following the ETF or charting the ETF, in this case it's XLC, we can follow what the sector is doing. All right. And then last thing here, we have our material sector, kind of breaking down here. Here we can see this phenomena, right? What was support turns into resistance. It's buyer's remorse. People buy, They regret doing so when the price goes lower, assuming they didn't sell up here. A lot of these remorseful buyers tell themselves they're going to sell, but they only want to do so if they can get out at break even. So they place their sell orders at the same level they had their buy order. And here again, we have resistance when the market moved higher. A lot of the people who sold are now remorseful sellers, and they tell themselves they want to buy their shares back, but they're only going to do so if they get them for the same price they sold them at. So here we have an example of what was resistance turning into support. And as we can see, that support is broken. All right, so that's it. This looks kind of bearish for the market. If these things don't reverse, there's a good chance the broad market keeps going lower. All right, everybody. Thank you. Have a good day. See you soon.